Okay, it looks like we're live. Hello, everyone. A little early as usual. Quite a few of you waiting already. We got Keith in Arizona. He says, hope those German wind turbines produce a lot of heat during the winter. Yeah, I saw that the German government just decided not to keep its last three nuclear reactors open. So yeah, they're gonna have a winter of discontent, I think, in Germany. I've done quite a bit of research about the energy situation and also the nuclear energy part of it. I'm coming out with a video tomorrow about that. Not my normal video, but later on in the day. It's about the energy reset. Let me know if you guys can hear me. Grow Mechanic is here. Chris Jones, Norbert is in Bulgaria. I think of buying a farm here. Really wonder if it's worth selling silver and gold for it. Scoobyism 3 is here. Let's see who else is here. We got Faith Parent, wishing happy birthday to someone. Alias Jones says he's been trading some options. Yeah, I used to be, as most of you probably know, a futures and options broker for government in the government bond market. So volume is good. That's good. Joker Alpha, thank you. No is here. Nice to see No. Ricoin, bonjour from Montreal. Pablo Pina, 903 Boater from Michigan. Stu King. Yeah, we're going to look at the equity rally when we, at the top of the hour, we're going to look at the bond yields first, and then I'm going to give you my opinion on the equity rally. Azahi from Australia. Paul Weens from Southern Manitoba says, hi, Billy Bullion. Over here says, if Donald Trump gets arrested, do you think there will be major civil unrest in the US? It's possible. Captain Banana says, hello, Billy's dad. Dilwyn Roberts from North Wales. So, brother. James Sperling says he never gets time to see live broadcast. Andrew Watson, I can hear you loud and clear here in Basingstoke. Russian, the new metal standard. Yeah, the Russian Finance Ministry announced that they're looking to start their own bullion market, international bullion market, to compete with the LBMA, and it will be called the Moscow World Standard. I think it's quite significant. There are, of course, the gold exchange in Shanghai. I saw the Indians are looking to start their own bullion, international bullion trading. So, and we saw recently that the director of the LBMA and director of precious metals trading for JP Morgan was convicted of manipulation by US courts. So I think the LBMA is losing a lot of credibility. LBMA, of course, is an unofficial arm of the Western central banks. So the more credibility they lose, the more credibility I think the LBMA will lose. I think the LBMA really is controlled by the bankers in London and also Wall Street. Mickey from Florida, hot in Florida. Yeah, it was pretty pleasant here. It wasn't that hot. It's in the, I would say, mid 70s, which is quite nice. Where's Billy? He's right there. Can't you see him? He's right behind me on the sofa. Greg Austin, bonds are just fiat currencies, but they have like I mean, the fiat currency is backed by the bonds, government bonds. Government bonds are money, but they're like with a term, of course. They're not like ready cash. You've got 1 week, 3 week, 1 month bills. Actually, it's 1 month, 3 month, 6 months, 1 year bills, and then you got 2 year notes. Yeah, and the other thing we're going to talk about today is uh, the central bank's balance sheet, because it's full of these government bonds, and if yields continue to rise and rise sharply and quickly, the balance sheets of the central banks basically become, well, full of losses, and the currency that we use every day will lose a lot of value. Investors will know that those currency pieces that we hold are becoming worth less and less, and it's going to make inflation even worse, or rising prices even worse. Alain Roy, bonjour de Montréal. Hi, Alain. Cupid Stunt, evening, Marion, Billy Bullion, everyone, greetings from Warrington. Gary Croft checking in late. You're not late, really. I still got 5 minutes to go. I usually come on a little earlier. The time is set really to start at 9, but I start a little earlier just to have a informal chat. Evola Sunglasses says, great interview with Peter Lilly. Yeah, I mean, I know he's a career politician, and I was surprised he said yes. So it was nice of him to accept it. And he asked me after the interview, how did you manage to become so popular on YouTube? And I told him, you just have to stick to what you know, stick to what you believe in, and yeah, and also discipline. That's the thing. You need to, if I stop doing videos for a week and then came back and then started again, you need to keep going. That's what it's all about. The other thing that you might not know is that a lot of times it looks like I make a video maybe 15, 20 minutes, and it seems like, oh, that's really easy. But I sit here watching things a lot of times, not just during the week, on the weekend when I have time. I read a lot and I listen to other people as well. So it's a full-time, you have to keep at it. Joker Alpha, Rafi was talking about Fed losses a couple of days ago. What does that mean for the average Joe? Yeah, as I said, the Fed actually, uh, they they account for their bond holdings in a way that they market to maturity, i.e., if they buy a 10-year note from the Treasury and the price is 100, and let's say in 2 years' time that price goes down to 80, they're still marking it at 100 on their balance sheet. But the market knows that even though the balance sheet might not be moving, that is marked to maturity, they know that those bonds that they have are losing a lot of value. So as I said earlier, they're not going to go bankrupt, um, because they can keep printing money, and they can wait until the US government pays them back when the bond matures, the US Treasury. But the thing is that, yeah, they can wait, but we can't, investors can't, because in 10 years' time, dollar or Federal Reserve note or whatever, or fiat currency will be worth a lot less because of inflation. Silver Task is here. Hit the like button, he says. St. Louis 9. Hi, St. Louis 9. We got a super chat. Dissident Agnostic. Why isn't inflation causing the price of silver to rise? First of all, I define inflation as the increase in the supply of currency and credit. And we've had that for, let's say, 50 years since Richard Nixon closed the gold window. What we're getting now is rising consumer prices. So as the Austrian school says, yeah, you can have inflation, but the currency doesn't flow the same way to everything, to every commodity or service. It's the Cantillon effect. It goes first to a few and then to others. If you remember well, Dissident Agnostic, back in 2020, when we had the major crash in all markets, liquidity just evaporated in March 2020. Silver dropped to like $12 or just below $12. And then in the next 9 months or 6 months, I would say, not even in the next 3 to 4 months, it went almost to 30. And why did it do that? Well, because it was forecasting already the rising prices that we're getting now, because silver and gold, for that matter, gold went from 1450 to above 2000. They could see that all the money printing, all the fiscal stimulus would create the rising prices. But in the 70s, if you look at the chart of silver in the 70s, I think it was trading around below $2 in the early 70s, went up to around $7 in 1975, I think, beginning of 75. And then it dropped back to like 3 or 4. And then it was only back in 77, 78 that it went back above 7. And then from 78, 79 to 1980, it went all the way to 50. So I think it's going to be the dollar and other fiat currencies are going to drop even more this time around because there's so much more debt. And I think the central bankers and politicians, they're going to keep inflating the system, because if they don't, we're going to have riots or even worse, I would say. Okay, so it's just gone past 9 o'clock. So let's have a look here. The title of the live stream is Bond Yields Across the World Pointing to Trouble Ahead. Yes, I made a video recently about bond yields in the UK rising quite worryingly, because in the last few years, when the currency was dropping, sterling, bond yields were pretty steady, even dropping. But now with the pound dropping, or the dollar going up against the pound, yields are going up as well. And then I had a look this weekend, not just at the UK bond yields, but all the major countries of the West, and I'm going to share it with you. And just to show you some charts, I think it's very important that we look at these so you can see what I mean. Let's do a slide. Play the slide. So here's the U.S. 10-year yield, and this is a chart since, let's say, the end of 2019, and you can see this here in March 2020 we had a really big spike down and then up. It was very volatile, and now it's starting, and then it's been going up ever since. We got to around 0.3%, the 10-year yield, and then up until the middle of June, yields are really spiking this year. They got up to about 3.5%, and then it started going down, which has helped the stock market. It's helped, it's helped risk assets. As you can see, we dropped to around just below 260, and now it's going back up. So now I want to show you. This is a US 10-year yield as well. It's a long-term one, bond yields from the early 80s. And you can see that we're breaking out of all these important trend lines. And we had, of course, like a 40-year bull market or 40 years of falling yields. What the falling yields did is that it corresponds to a bull market in bonds, because as yields drop, bond prices go up. The other thing it did, it made credit very cheap, because US treasuries are like the risk-free rate of return, and all other credit is priced off this. So corporate bonds, mortgages, credit card rates, everything has been going down for 40 years. So people have been able to borrow, to buy real estate, and prices always keep going up. But I think that's turning now. And it's just the beginning. And you can see that the correction that we had recently from the middle of June, it looks just like a little blip. So I expect things to get pretty rough in the next 6 weeks. I could see us go up to 4% before the end of the year. So we're going to continue. So I've done this for all the different countries. So we've got Italy, as you can see, March 2020, a lot of volatility. Recently, middle of June, we went all the way up to 430, the 10-year yield. It dropped and now is going back up. And then the longer term Italian yield, as you can see, we've broken out. This is from the early 90s, as you can see. Now we'll go to France. Same thing, March, the volatility. Going back up. And there's the French long term. That looks like it's broken out decisively as well, the long-term trends. This is the German. This is probably the best performing bond. You can see that its yield went almost down to minus 1% negative yields back in March 2020. But now we're firmly going higher here. Yes, it came off from the middle of June. Now it's going back up. Long term as well, it's testing this line actually from 1980, as you can see. So they all seem to be doing the same thing. We got the Spanish as well. I got the Spanish here. The trend line for the Spanish, the long term, is not really that close, but I think they will not escape. There's the UK, which we looked at last week. It's picking up very quickly. And I've got around 270, the upper line, but I think the trend is we're gonna see years of rising yields. Here's the Canada for my Canadian viewers. Almost back up to 3, long term as well, all the way to the mid 90s. Australia, same thing. There you go. Netherlands as well. Interesting, the long-term trend line. I think we're going to break that. It's probably going to be around 160, 165. And now someone asked earlier about what I thought about the stock market. Well, have you noticed, like, since the middle of June when bond yields topped, and then they've started correcting down, the stock market, the NASDAQ, has gone up since the middle of June. But now it looks like it's topped. And that's because I think bond yields are going back up. That's how they affect the stock market. So that's how I see it. So let's stop sharing here. Hopefully you guys saw that quite well. Um, the thing is, it filled my whole screen, so I couldn't see the comments. So if you have any comments, so I don't have to go back on the chat, please ask me again. Gianfranco Bergagna, yes, I live in London. Mark, the Silver Shark, I think you missed my first hello. Hi, Mark. Nice charts. Interesting to see same issues in different currencies. Yeah, it just goes to show that the whole fiat currency system is doomed. And the way this affects the central banks is that the central banks, they've filled their balance sheets with these bonds. So I'm going to show you now. This is, anyone can get this. It's called Yardeni.com. So we'll share this and we have a quick look. And even if the central banks can keep these things until maturity and not go bust, investors will know that the central bank's balance sheets, and hence the currencies that are backed by the central banks, the currency is going to become worthless, because if the assets that are supposed to back the currency are going down the drain, the currency is going to go down the drain. The only way they'll have to stabilize the currency is if they allow the price of gold to go up, because most central banks still have some gold. So as you can see, these are the balance sheets. Look how they've grown since 07, 08. This is by central bank, but if we put all these major central banks, Fed, ECB, BOJ, PBOC, together, you could add the Bank of England. I guess that's another $1.2 trillion. Yeah, I mean, they've gone from holding 5 trillion in bonds basically to almost 32 until recently, and now it's going down. But the interesting thing here, let's have a look. It's this one I wanted to show you. This is when they try to normalize last time their balance sheets, and we had a repo crisis right here. You know, people say they had to do it because of the COVID crisis, but I think that was just a cover for this. They had to come in here. It triggered the repo crisis. The banking system was on its legs. That's what it was, because the banks didn't want to lend to each other or other financial institutions. So I think pretty soon something's going to happen here, and they're going to turn around and they're going to increase again. You know, this is the yearly change, and they're going to increase the balance sheet again, just like they did in during the 08, 09 crisis, and in the 2020, 2019, 2020 crisis. So yeah, this is Yardeni, as you can see. It's quite a good, they update it every week, I think. Copper will rise sharply, says Gianfranco Bergagna. I agree. I think commodities are still, hard assets are still in a long-term bull market. We've had a few months of drawdown in commodities, but I think it's a place to be in relative terms to paper assets. Jeremy, would banks ever call in their loans? Unless they're, if they're callable, yes, because when you take a loan out, you have to read the fine print. There are bonds that are callable, so you can call the loans, but if there is no option to call it. I don't think they can. Morgan Marusteri, and thank you from Sweden. Sverige as yeah. And the same thing has probably happened to Swedish 10-year yields. I actually did trade Swedish bonds years ago, government bonds. I traded all mostly US treasuries and Italian government bonds and German government bonds, but I've traded like Canadian, I've traded Swedish, Spanish, French, all kinds of government bonds back in the early 90s till, yeah, 2012. In the Weimar Republic, was there ever any violence against central banks? I don't think so. I don't think so. I don't think people were as informed as they are now. Joker Alpha, dead cat bounce, the buzz phrase. Yeah. Yeah, the bounce from mid-June to now. And someone said, "Oh, if everyone's saying it's a dead cat bounce, then it isn't." I guess time will tell. Usually, this time of the year, after August, when we come into after Labor Day in the States, the into September, it's usually a tough time for the financial market. So we'll have to see. And there's a lot going on right now in the world that makes me think that things could get worse, especially in Europe. We're seeing natural gas prices still go through the roof. Here in the UK, the government is in limbo. Not that I believe government should be helping all the time, but I was just reading that in the UK, there's no help for uh, industry, for businesses like manufacturing. A lot of businesses that need to use energy because there's no price cap like there is for consumers. So just show you an article that I was reading. So I think things are going to get pretty bad, and with bond yields starting to move higher, yeah, we could have a real cocktail of disaster. So you see here, UK industry braces for a bleak winter as soaring energy costs threaten closures. And what that does as well, first of all, it creates shortages of the goods that they produce. Then if they have to shut down, eventually thousands of people will lose jobs. And yes, it's just a really bad situation. So as you can see here, Britain has no plans for crisis. Industrial and chemical companies are among the heaviest energy users, and for many manufacturers such as glass and ceramics, a continuous supply of gas and electricity is critical. Soaring energy costs have already forced widespread curtailments at fertilizer plants and indefinite closures of two smelters in Europe. Some fear the UK could be hit harder with its response to the energy crisis, stalled by paralysis in decision making until a new prime minister takes power next month. So there you go. UK power prices soar. And the same thing is happening in Europe, but in Europe, I think they're trying to help a bit more, even though the German government doesn't seem to be. You know, European natural gas prices, they're trading at 13 times the average from a decade ago. So things are really, really not great. Alaskan says, great content. Thank you. V-Searcher says, I like the mic. What happened to the strikes? WTH. the labor union. Oh yeah, we're gonna have also a strike, I think, at the major port, Felixstowe in the UK. It's a container port, I think, for 8 days. We had strikes in London, Thursday and Saturday. Everything was disrupted. We went into central London to have dinner with a friend, and it was really, we had to get a cab. It was expensive, but everything is disrupted, and I think it's going to get worse. And am I angry at the people who are striking? No, it's very inconvenient, but I can understand why they're striking, because the currency that they earn in is losing value at a rate of knots. So to have a go at the strikers, I think is, yeah, I don't think it's really fair. I think the people that we have to blame, well, number one, the central bank that has the power to create all this credit out of thin air, to buy bonds and keep interest rates low and keep the boom going. Also, governments have been deficit spending since the '08 crisis, and also to an extent the general public, because the general public, not you or me, probably, hopefully not any of you, general public expects the government to always be there to help them, and they don't realize that there is no such thing as public money. The government doesn't have any money. They have to tax it from us through real taxation or through the hidden tax of inflation, which we're starting to pay now. So those are the culprits. And unfortunately, and that's why I made this mug, designed this mug for my Teespring store, AUAG, wage only. Hopefully someone watching here is one of the striking workers in the UK or anywhere in the world, a member of a union. Maybe you could ask them to campaign for sound money. Matt Bittner says U.S. natural gas production projected to hit record high. Yes, but their natural gas price is almost at $10, which is multi-year highs as well, and it's much harder to ship. There is no pipeline from the U.S. to Europe. It's a liquefied natural gas. It comes through shipping containers, shipping tankers, really. Jean-Louis Lalonde, what about Moscow gold standard? Does it mean the end of the US dollar world status? I don't think the dollar is it's still gonna be used as a reserve. It just won't be the major reserve currency. I think it's gonna be more balanced. The Moscow gold standard, it's not a gold standard, it's the Moscow world standard, Moscow world standard. It's they're going to try to compete. It's a bullion market, international bullion market in Moscow, to try to compete with the LBMA. That's what it's about. And I've noticed there's a lot of people talking about that the price in Moscow is $2,400, and that's not quite true. A few months ago, the Russian central bank said that they would pay 5,000 rubles per ounce of gold. And at the time, I think the ruble was very weak. And what that did was put a floor underneath the ruble. And that's why the ruble went up against the dollar. I think it went from around 90, 95 all the way down to 55. The dollar went, so the ruble gained value. And then they said a day or a week or two later, after they've put that 5,000 ruble per gram, they said they're going to withdraw that, but they probably still have that as an option. So the reason why people are saying 2,400 now is if you look at the ruble now, that's trading around 60, and where gold is in dollars, and you do the 5,000 ruble per gram, you get to 2,400. But the Russian central bank or the Russian treasury or finance ministry, they're not doing that right now. But they could come out and say, oh, we're going to reactivate that 5,000 rubles per gram. That would drive, well, people in the West, or let's say people in Dubai or India or elsewhere, they'd buy gold here in the West at 1750 and then go to the Russian finance ministry and get 2,400 for it. It's an easy arbitrage. What that would do, it would drain the physical gold from the West into Russia. That would be one for the books. So it's possible that that could happen, but you can't do it right now. James Hafford, you look pink. Did you play golf in the sun? I played golf this morning. It was fairly sunny, but also the light here, I guess. Joker Alpha, Mario, thoughts on Michael Burry selling all his positions except for a private prison stock? Well, I hadn't seen that. I guess he expects a major crash in the stock market, NASDAQ, and the major markets. Someone else here, B.R. Williams, please kiss and hug Billy, one of my dogs. Oh, I'm sorry to hear that. One of his dogs died this week. Yeah, Billy's getting on. He's getting really, yeah, he's 14. He turned 14 a couple of months, last month, and he's not seeing anymore. And the heat in the last couple of weeks have been tough on him, but he's still all right. He's still eating well, but he's had his best days, I would say, unfortunately. Nuno Teixeira says the dollar rising has been bearish for gold. Since the dollar will be the last currency to fail, don't you think we are still away from the gold bull market? Well, it depends what currency you talk about. Maybe in the dollar, even in the dollar, we're still in the bull market because the bottom in gold, we had the top in 2011, we had a bottom in the late 2015 at 1,045, and now we're at 1,750. So we're still in the bull market, even in dollar term, and especially in the other currencies. But why would I want to keep dollars? By keeping dollars, you finance the deep state. By keeping dollars, if you have a big amount, you have to put it in a bank. You finance the bankers, and you're actually lending money to them or lending wealth to them. So the thing is, we worry so much about the fiat price of gold and silver. What we have to worry about, and what I think will happen, is that gold and silver will be the only money left that have purchasing power. And it doesn't really matter. It will be $20,000, $30,000 or whatever. No, you're going to have to compare it to things. But I think you'll be able to buy a lot more things than you can now with gold and silver. And why is that? Well, because the fiat currencies will be destroyed and no one will have real money except maybe us and some others, people who own gold and silver. And that's why, unless you have an emergency and you need to spend that gold and silver, I would hold on to it very tightly. Joshua Porter, why can't the Russians sell gold for 2,400 now? Well, because they took that off the table, because they used that $5,000, 5,000 rubles per gram to stabilize the ruble. That helped the ruble rise when they said they basically put the ruble on on a gold standard for about a week, and it drove the dollar down from around 95 to around 60. And after they did that, they took that off the table because they're probably waiting to put it back on, I would say. And when they do put it back on, it's going to drain a lot of gold from the West because the price in Moscow will be a lot higher. And maybe that's why they're setting up this bullion market in Moscow, because before they can do that, they need to create a bullion market in Moscow because they don't have one. So it could be because of that. James Sperlingmeyer, do you invest in property to be it commercial, residential? Well, the only property that I have is my own house. No, I do not invest in real estate. And why is that? Well, because I think it's not worth the hassle. Uh, you have to do it as a business. And I know a lot of people have done it successfully, but maybe in the future when money dies, when our fiat currencies die, maybe our gold and silver might allow us to buy a property or two. But the other thing as well, I think sometimes buying more than one property is a hassle. You've got taxes and you've got maintenance and you've got to deal with tenants. So sometimes the best, if you want to go abroad and go, maybe just spend the money to stay in a really nice hotel or resort instead of having a place. I think that's how I'm going to look at it. What I'm investing in is like my business, which is my videos on YouTube, my ancillary the affiliates that I deal with through YouTube. That's what I'm focusing on and growing the channel. And everyone has his or her own business, of course. And I think people should focus on that and not let what's happening around the world or in our financial and financial system and economy scare you. Because if you're prepared well and you have very little debt and you don't have much in the system in terms of fiat currency, I think you'll be all right. And you might even thrive when everything hits the proverbial, when everything hits the fan, so to speak. When is the new Mercedes coming? Well, I didn't buy a Mercedes. We bought, actually got it last Wednesday. It's a Hyundai Tucson hybrid. So there you go. It's a nice car, but we didn't really need to sell the other one. Well, we did, but it was perfectly okay. Matt Bittner says you can hire management companies to cut the hassle factor. Yeah, but then it cuts into your profits because you got to pay someone to manage it. But I would say that having real estate or property over the long term, and if you're not leveraged, is a good way to preserve your wealth because it's real estate. It's better, I think, than leaving your wealth in the bank and money, if you want to call it. DMC, if your channel hits 1 million subscribers, could that be a contrarian indicator that precious metals market? The thing is, yeah, normally, yes, I would say that, but I think this crisis is going to be different because I think currencies are going to be destroyed, but you could be right. It could be maybe the time to exchange some of your metals, because I think it's always good to have gold and silver. They're money and savings, but it's a good time, of course, to exchange it for very cheap assets and things that you might want. Yeah, you could be right. Not sure I'll get to 1 million though. Who knows? 905 concurrent viewers. That's not bad. I mean, sometimes I get over 1,000, but it's good. Yeah, Kalai, Smilov. I count my silver in ounces, not dollars. Yeah, me too. Nicholas Nasty says, how late am I this time? Well, we started about 40 minutes ago. We still got another 25 minutes. YouTube never sends me notifications for when you go live. NB, so what could possibly break the gold futures market manipulation? Well, um, if people stop dealing on COMEX, uh, dealing with the paper market, because people dealing on COMEX and speculating in futures gives the ammunition to the other side to manipulate the market. But if people left the game, it would collapse because they would have no one to trade with. I think this new Moscow bullion market could impact that as well. What else? The general public awakening and starting to buy physical gold and silver, because COMEX was created, not COMEX, but the gold futures contract was created in 1975 to keep the public away from physical. They don't want you to have physical, and that's why you should have it. If the government and the bankers don't want you to have real gold and silver, that means it's a good thing. Because we need to do everything the opposite of what they tell us we should do. So I think that's the only way. Kurt P says you can reach 1 million for sure. Yeah, it's possible. Who knows? I'll just that's not my objective here. If it happens, that's good. Uh, my objective is to try to inform the public as honest, not as honestly, well, as honestly as possible as I think, and what's right, and kind of give them some of the knowledge that I have from working in the financial markets and from my studies as well about money and history. And that's what I'll keep doing. Bill Delahunt, can you do more videos on ancient currency collapses, Rome, Napoleon, Julius Caesar, etc.? Yeah, I mean, the Rome part is quite easy, isn't it? I mean, the denarius used to have, well, the denarius was a coin that was like 90% or whatever silver. And then the way they inflated the system back then was taking the silver out of the coins and still having the same face value. The problem was that by the end of the third, beginning of the fourth century, there was almost no silver left. And that led to the collapse of the Roman Empire eventually, in 400 or so, because they couldn't pay for the legions, for the soldiers, right? So that's, and I think the Western Empire is on this in the same boat. Um, and it could happen a lot quicker. Rome took, I guess, 400 years since it became an empire around the time of Julius Caesar. So yeah, and Napoleon actually put France back on a gold standard, really, because when the assignats were issued, when they experimented with paper money in the 1790s, uh, it was a disaster, and by 1796 everything had collapsed. And then Napoleon became a consul in 1799, and he said, I will only pay with cash. And by cash, he meant gold and silver, or coins or specie. So actually, Napoleon put France actually back on a sound money footing, and it stayed there even after he left. So there was no currency collapse under Napoleon. It was before him. What do you know about rhodium? Don't follow it too much. I remember some back in like 10, 15 years ago, it went really crazy, up quite a lot, from like $100 to thousands of dollars, but I don't know much about it. Where did all of Rome's silver go during that time? Well, it was probably went to the barbarians. They call them barbarians. It flowed everywhere where Rome traded. Whoever they had to pay the silver, they had to pay someone that silver. Probably went to Egypt. They had to buy wheat from Egypt. It went all around the world, but you can still find a lot of Roman silver coins. They're not rare. Robert Browning, what do you think of the property or asset bubbles? Yeah, I think they're deflating right now as we speak. We got a little bit of a respite, um, since the middle of June because interest rates have fallen. But yeah, housing is going to be affected. We spoke about this earlier, the beginning of the live stream, that yields around the world are starting to pick up again after they dropped from the middle of June. They're starting to go up again. And that will mean, government bond yields, that will mean that mortgage rates are going to go up. And unfortunately, people never seem to learn the lesson. And here in the UK, especially, people have been borrowing, taking on mortgages at very cheap levels when the Bank of England rate was around zero almost. And you always hear people saying, maybe not now, but a year, 2, 3, 5 years ago, they always said, oh, interest rates will never go up to 5, or, they all expected interest rates to stay near zero. And I think a lot of people still do. And they're going to be in for a shock, in my opinion. Tristan Jones, a little off topic, but a little thought I was having recently. Could it not be argued that assume assuming man-made climate change is a fact, that the printing of money has exacerbated this? Yeah, definitely. I've spoken about this because if you look at the world after 1971, you just have to look at the charts. The national debts went through the roof, the money supply, uh, inequality, development, the cheap credit that fiat currency provides, and especially in the last 40 years, since the early 80s, credit has become so cheap and so abundant that it's led to a lot of building and projects that maybe we didn't need. It's led to a lot of people having a lot of families having 3 or 4 cars on their, parked on their driveway. It's led to all the travel, people taking 3, 4 holidays a year. I mean, I used to talk to my wife about this even before the recent crisis in 2020. Uh, I go play golf, and someone, let's say in April, and someone say, "Oh, so where are you going this year? Have you booked your holidays yet?" I said no, and then they'd say, "Oh, I booked this in June, August, and September." You know, yeah. So not just here, but everywhere around the world, you had development that probably wouldn't have happened under a sound money system. So you had a lot of environmental damage because of that as well. And I think globalization as well led to that, because you can buy kiwis from New Zealand, and it comes on the plane or whatever, and it's like 30, 40 years ago, it was more difficult to get kiwis, but it's not the end of the world to not to have kiwis. So kiwi fruit. So that's what I'm trying to say. Malinvestment. That's right, Nicholas Nasty. Yeah, Matt Bittner says, I can't wait to see people shocked by higher rates. China is now in a 6-year drought, 60-year drought. Lots of things showing up in their rivers. Also in Europe, like in Germany and France, the rivers are drying up. But I was listening to a clip from Talk News. It's a new channel in the UK, and the guy was interviewing a scientist about climate change, and he said that the UN focuses on 1850, because they say that's when the world industrialized, and they've said that the temperature has gone up by 1 degree. But according to the scientists, it's the coldest period. 1850 was the coldest it's been in the last 10,000 years. So they picked the coldest uh, point in the last 10,000 years to measure how much the temperature has gone up since then, and it's only 1 degree. So, and he was saying that it's alarmist, and it's alarmist because it's political, this movement. And he said the UN created this, but who was behind the UN creating this? And I've told you guys many times, and you need to watch George Hunt. He's passed on, but he was in the environmental business, and the people who pushed the UN were the people who founded the UN, the Rockefellers, the Rothschilds, and the bankers. And why do they push this agenda? Well, because if you have a climate crisis, it's a world crisis. You can have world rules, right? You eliminate the power of the nation state. It's what they've been trying to do with that disease we've had for the last 2 years and the WHO. It's all about control. And that's why they have to scare people. And people like me and others who see through this and who've done the research for, I can say decades now, because I've been doing it for 20 years. We're called conspiracy theorists. So there you go. Over here is fracking craze over. Uh, I think I'm not sure how here in the UK I think they're not allowing it, but in the States, I think they're still fracking. But I think it was more widespread under the Trump administration. I don't know what's happened there since Brandon has come into power. Uh, Niels Han Dynasty, London Fire Brigade on Monday said it was uh, tackling a fire in a high-rise building in the east of the city with dozens of firefighters tackling the blaze. Mini ice age, Tom Miller, maybe. I think that's what Cliff High's been talking about. I recommend you guys watch if you want to know more about fracking and like climate change. I did an interview last week with actually a politician from the UK who voted against the Climate Change Act of 2008, and he talks about that in that interview. If you go on my channel under videos and watch and look at the latest videos, it's an interview with Lord. He's a Lord now. So he was in the House of Commons. He retired and they made him a Lord. Lord Lilly, Lilley. Rick and Rick Enfed. Maybe I should change my surname to Enfed, Mario Enfed, or N Bank of England. Thank you for your super chat. Graham Hobbs, yeah, Brandon is just they're just holding the strings, and he's like, there's someone else in power, right? How high will the 30-year yield go? I look more at the 10-year. I think the 10-year is a better one to look at. Let's have a look, because I've got the charts here. Let's go back. Let's go to the long-term one so you guys can see. Here we go. Let's share it. So here we go. That's the US 10-year yield. So 3.5 was the high this year. The 3.5 as well. 3.25 was the high back in 2018 when they had to reverse their normalization. So if we break this 3.5, I would say the next target would be here around 5%. Yeah, and then we could go here, 6. I mean, eventually, I don't know how long it's going to take. It could take years. I think what we're going to see now, because since the early 80s, we saw lower highs and lower lows, as you can see. But if we do get a crisis, we could see a huge spike. We could see it spike to 10% in the next year, and then maybe it will come back down, but then it will keep going up, I think. So in the short term, I would say we need to break 3.5, and then we could go to we could quickly go to 5%, which is a key level here. That's the US 10-year yield. What else have we got? Is the French, German, I think. Let's look at the UK for my UK viewers. Yeah, the UK, I mean, the same kind of thing. We could go here, the next, and that's like 5%. That would mean mortgage rates around 6, 7, 8. Can you imagine that? How people are gonna be suffering when that happens. Helsinki, former Australian Prime Minister Morrison assigned himself 5 ministerial positions in secret during the pandemic. Any thoughts on this? I hadn't heard about it. I'm not surprised though. They'll probably use the excuse of a crisis. Over here, I believe Jim Rickers is expecting some type of economic event on September 22nd. Yeah, someone's told me about that too. We'll see. I mean, I made a video recently about the UK gilt yield, and the currency, that a lot of currency crises happen during the solstice, which is September 22nd. So who knows? Billy, give me a break. Billy wants to get down, but he'll come and say hi to everyone. Say hello, Billy. There you go, boy. So it looks like we have a bot here. Yeah, not good. Thank you for deleting the bots, guys and girls. Yeah, James Hafford, thanks. Yeah, I that's the other thing I want to say for those of you who are maybe new to the channel, and you probably know this, whenever you see in the comment section something about a WhatsApp number and it's got my face on it, it's not me. And I try to delete those as much as possible. And we get a lot of these porn links as well. And they even put them in German and different languages, and I can see, and I delete them. It's weird because YouTube, they cancel people like, and then they do they can't do something about this. It's annoying, isn't it? David Otness says my cat is 18 and a half. I think my brother-in-law had a cat, and unfortunately my brother-in-law passed away in 2008, and he left one of his friends kept his cat. His name was Fred, a ginger cat, and Fred lived until he was 21. So I saw a tweet about the fact that a lot of people in this country are abandoning their cats, maybe because they can't afford to feed them anymore because the cost of living crisis, which is very sad. Mr. Brozilla says, Billy gave me the sign, gonna buy more silver. Rudy Benthammer, do you see them getting interest rates higher than 8-9%? I don't think it's possible, but I could see. Well, you see, the only rates they can really control are the short-term rates, because that's the rate that they target. Like the Fed right now, it's 2.5%. That's the short-term rates. But if the long-term yields or the longer rates start going up very quickly, which means investors are selling, they might have to raise the short-term rates to stop to stop the bond market collapsing. So they might not have a choice. And if they don't, and they say, oh, we're going to do more QE, then you can bet the currencies are going to go down the drain even more, I would say. So really, to stop rising prices or to stop the inflation of the currency, interest rates should be more than 10% right now everywhere in the world, I would say. Maybe not Switzerland and some other countries, but definitely here and in the US. James Hafford, should we be stacking with precious metals for liftoff? I don't look at it like that. I've been stacking precious metals for years. It's savings, and it has done the job. It keeps its purchasing power. Precious metals and commodities, they're not really going to lift off. It's paper assets that are going to collapse, and it's going to make precious metals look really good. So yeah, it's the safest place to be, in my opinion. And you're outside the banking system, because you can bet. That's the other thing I wanted to talk about. The bond market. Oh, we only got 2 minutes. The bond market is much bigger than the stock market. And the derivatives market also is a huge market. And the biggest derivatives market are the over-the-counter markets, no exchange, and it's mostly on bonds and interest rates. So when interest rates get very volatile, it's going to cause a lot of accidents. And who are the main purveyors of derivatives, the people who hold this stuff and trade it? The banks. And if you have a lot of money in the banks, it's not safe. And that's why stacking is a good thing. You keep it outside the system. Daniel Sass, I agree with you. Commodities as well. Anything that's tangible will do well. Star Path Academy lived through Romanian inflation, has some crazy true stories. I've interviewed him like 2 or 3 times on this channel. So maybe I'll have him on again. You can search for those videos. Just go on my channel under content and type Star Path Academy. We've got a minute left. Paul Harlock, what could pop the bond market derivatives? Volatility and higher yields as well, higher interest rates, because I think a lot of the traders and hedge funds, they in the City of London, Wall Street, they still believe that yields are going to go back down. They think that if we have a recession, yields are going to go lower, but I think they're going to be proven wrong. That's what will cause an accident in derivatives. The underlying instruments, the interest rate swaps, and all those things. Okay, thank you everyone for showing up, and yes, I wish you all a great rest of the weekend, or a great beginning of the week if you're in Australia and elsewhere in Asia. And I'll talk to you tomorrow. Bye.